Welcome, everyone. Welcome back. This is the Masterclass series that I'm doing for you, and I brought to you to give you some extra information and some detailed information about what's going on in the market. My name is Charlene Randall, and I am a tax boss, and I have some really important information for you today. So, we're going to be talking about the 2026 1031 exchange playbook. So, the first thing we're going to get into is the state of the market. So, if you're watching this, you know that real estate landscape of 2026 is completely and vastly different from even just 2 years ago. Interest rates have stabilized and we're seeing a massive 20% surge in transaction value. But more volume means more competition. And for 1031 exchange investors, the competition is the enemy of the clock. Okay. So today we aren't just talking about deferring taxes, we are talking about capital migration. We are seeing investors exit high resolution markets and move into pro business regions at record speeds. So if you're a realtor or you are an investor, you can no longer afford to be reactive. You need a playbook that accounts for tight inventory and even tighter IRS scrutiny. Okay, because the IRS has guidelines, rules, and regulations that you must follow in order for these advantages, like the 1031 exchange. So let's talk about the deadly 45. In a market where properties are under contract in 48 hours, the 45-day identification period is your biggest risk. So I see investors every day who think they have about 6 weeks to find a property, right? No, the answer is no. You have exactly 45 calendar days from the moment your relinquished property closes. The IRS doesn't care, if the 45-day line falls on Sunday or Christmas Day. The IRS is very tight with these regulations, and they are not giving you a chance to not follow these calendar deadlines that they have put in place. So the deadline is a deadline, okay? So in my firm, we use AI driven monitoring to ensure our safe harbor is established long before you head to the closing table. Okay. So we look at three property rule and also the 200% rule through the lens of 2026 valuations. So if you identify a property, let's say you identify a property and it falls on day 46, your exchange is completely over and done. Unless you've backed it up with a secondary identification. Okay, so I'll show you how we architect the plan B for every client. So this is something a lot of people make the mistake of thinking that they have all of this time and they could, mess around in the 45-day mark hits and the IRS doesn't care. Okay. So because inventory is so tight right now, there is also something called the reverse exchange. And the reverse exchange has become the 2026 power move. Okay. This allows you to acquire the replacement property first. and sell your old property second. It eliminates the 45-day entirely. So, this is something that people are now seeing through a different lens. So, it eliminates the 45-day stress entirely, but it requires an exchange, accommodation, title holder. So this is a complex legal structure um, where you park the property until the sale closes. Okay. So we're also seeing a rise in improvement exchanges. So maybe you found the property that is almost perfect, but it needs renovations, 500K in renovations. So with an improvement exchange, you can use your pre-tax 1031 proceeds to fund those improvements before you take title. This is how you create value while the IRS funds the renovation. So it's a specialized process where a tax boss like myself can really, help you through this and help you see, the advantages that you can have with a particular property in a particular situation. Okay. So another thing we are going to talk about is the bonus depreciation game changer. So bonus depreciation is the biggest news of this year with the one big beautiful bill that was signed in by Trump. So Congress permanently restored the 100% bonus depreciation within that bill. So this is a great shift. So in 24 and 25, we were looking at a phase out. But for 2026, you can actually deduct the full cost of qualifying property components in year one. So that's a big difference. That's a big game changer. Okay. So when we pair a 1031 exchange with a cost segregation, we are doing more than just deferring gains. We are creating a massive paper loss that can offset your other income. Imagine selling a warehouse, deferring $2 million in gain through a 1031, and then using 100% bonus depreciation on the new asset so you can wipe out your remaining tax liability for the year. This is wealth engineering, and this is setting yourself up for wealth for years to come. So, this information is for the people who really want to build in this season, the people who really want to engineer and structure their finances in a way where they are positioned to win. So, we covered a lot today, from capital migration to the power of bonus depreciation. But knowledge without the execution is just noise. So, to help you master these moves, I created a 1031 Boss branding kit, and it includes my executive checklist, the exact notice of assignment templates we use, and my 45-day ID vault, which you will need. So, if you're ready to stop reacting to these changes and start architecturing your legacy, click the link below, book your 1031 strategy consultation, and let's get to work. My name is Charlene Randall. Once again, this is how we grow millionaires and build wealth. So stay tuned for the next video in our Masterclass series that I am doing with you. From the